Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at the main question here, and that is the real reason why the Bitcoin price is falling. And I'm going to have a look at the exact level at which the Bitcoin will bounce from based on the previous 3 cycles. I'll also have a look at the background noise which is affecting the Bitcoin price, as well as how Bitcoin is being influenced by the wider markets. And finally, I'll have a look at the Bexit indicator to tell us exactly where we are in this cycle and when we can expect to top out at the end of the bull market. So if that sounds interesting, then you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, so I'm going to go straight into the main theme of this video, and that is the real reasons why the Bitcoin price is falling. And as we can see, since the 8th of April here, when we topped out at around about the $72,000 mark, we've basically been making lower highs all along the way, and we're finding support on this white trend line based on what's happened historically back here. So can we hold this trend line, or do we need to go back down to this horizontal line at the 5960 level? I'm going to show you a few things in the chart based on the previous 3 cycles, which is telling us the exact point when Bitcoin will bounce back. So why is this happening? That's the question. Well, I'm going to give you a number of reasons which have all collectively caused the price of Bitcoin to fall. The first one being here, the Republic First Bank has closed, and this is the first US bank failure in 2024. As we know, the interest rates haven't come down. There is a policy of keeping higher for longer by the Fed, and this has now had its first casualty, and this is the Republic First Bank, and this is a story from just a couple of days ago. So this is certainly weighed down on the Bitcoin price. Another main reason may well be this Mt. Gox story of the $9 billion overhang that has spooked the market, and this has put a lot of pressure on the Bitcoin price. And as the research analyst has said rightly, that the Mt. Gox coins could become a relevant negative price contributor in the next few weeks. And if we stroll down here, we'll have a little bit more of the details about this overhang. So this overhang is all about 142,000 Bitcoins. So the background to this is that Mt. Gox was an exchange that went bankrupt on the 28th of February 2014. And all the Bitcoins that were there have been subject to a claim made by the people who own those Bitcoins. And that is 142,000 Bitcoins that will be released very shortly. And the question is, what will the owners of those Bitcoins do when they get hold of them? Will they sell or will they hold? That is the big question, and the uncertainty is causing a little bit of the overhang with the Bitcoin price. And if we go back to the Bitcoin price on the 28th, this is the candle here, which closed on that date at a price of $548. And the current price is at 62,000. So that means that these people who had Bitcoins on that exchange are 113x on their Bitcoins from back in 2014. So if they had one Bitcoin, which was worth 548, remember they may well have bought them at a much cheaper price than that, but on that date of the bankruptcy, it was worth 548. And currently it's worth 62,000. And the question is, what would you do with that amount of profit? Would you sell or would you hold? And the true answer may lie somewhere in between. Some will obviously sell depending on their situation, and some will hold depending on how much they know about the Bitcoin cycles and the fact that we're in a bull market, and the chances are that the market is going to rise much further. The uncertainty has certainly caused an overhang. And finally, the third main reason why there's a bit of an overhang is because we've had an incredible run with the ETFs, and the current situation is that if you just look at the 1 day's holding Bitcoin, this is really now, as you can see quite clearly, going into red territory. So there's not much money inflowing into the ETFs, and there's more of the outflows going on at the moment. So this is obviously causing another overhang of the Bitcoin price. And the BlackRock ETF, IBIT, which was really holding up strong, is actually now having no Bitcoins going in at all. So let's see if that picture changes. And of course, everything could change tomorrow when the Hong Kong ETFs come on board. And as we know, the much awaited spot Bitcoin ETFs will now come to the Hong Kong market tomorrow. And this could change everything. And what we really need here is some success with the Asian crypto users, and only time will tell how successful this will be. And a little clue, which may or may not be correct, is down here from Willy Woo, when he's referring to the fact that the Asian market in user count is actually bigger than the US and the European markets combined. And while the mainland Chinese people are not allowed to buy into the Hong Kong, we know that the rich people will always find a way to bypass the rules. The second part of the main theme here is that where will the Bitcoin price bounce from? This is what people want to know. And currently what we're finding is support at this support line here, which is currently exactly where it is at 62,000. And my narrative is that it's going to fall through this and find support at a lower level. Where is that level going to be? If I put on the pi cycle, which is the green and the red lines here, as you can see, they're quite far apart. And as we can see, currently the green line here is at about 57,000. So if we have a look at the weekly chart, if the price of Bitcoin is going to fall through this support line here, then it's going to hit this green line at around about 57,000. But I suspect because of these strong points here that we found support with all these long wicks at the bottom, telling us there's a huge amount of demand at these lines here. I think there's a greater probability with the trajectory of the green line. We can see that in the next couple of weeks, it's going to move towards this 59,000 level here. And this is where it'll probably come back down. So it looks to me, just by reading the charts, obviously nobody knows the future. All I can do is elicit the information from what I see here. And I see the green line coming up to the 59 while the price comes back down to those levels as well, sometime in the next couple of weeks. If it does happen this week, then it's going to come back down to the 57 and find support. And why do I say that? Well, the evidence really is in the charts. If we look at the full cycles, you'll see that once we have hit the red line, this is one of our 2 targets from back at the early part of 2023. So in the first cycle, after we bottomed out, we came up to that red line. And guess where we found support? We found support twice here on the green line, once here and once at this point, before we went into this parabolic move. And in the second cycle, up to 2017, we bottomed out here, came up to the red line, and then once again had a correction back to the green line before we had this big move to the upside in the parabolic move. And in the last cycle, going back to 2021, when we bottomed out here in 2018, we came up to the red line, and once again we found the price went back to the green line one more time. So 3 out of 3, once we've hit the red line, we seem to come back to the green line. And obviously this fell much further than the green line. But we can expect at least some support on the green line. But as you can see, once we recovered from the COVID situation and got above the green line, this is where we found support all the way along before the parabolic move. So here we are once again, having bottomed out here at 15,400. We came up to the red line. So by eliciting the information from the previous 3 cycles, we can say with a higher probability that this green line is going to come into play somewhere along the line. And as we can see on the weekly chart, it's going to the upside here. So either this week or next week, we're going to hit this line, and that'll probably be the exact point where we're going to bounce from. And currently, as I say, it's at 57,000. By next week, it should be up to 59,000. So if we're going to find support on the 59,000 of these wicks down here, that would make sense for it to actually come to some support next week. And only time will tell. Okay, we'll have a quick look at the background noise, what's been affecting the Bitcoin price as well, by looking at some of the wider markets and which direction they're going. Okay, if we start off with the SPX, we'll see that last Friday, the SPX actually gapped up from this level here. So the probability is it's going to come back down to at least fill this gap. And that gives us a clue that there is further downside to come. And the targets that we had after this double top, we mentioned that we were going into this 60-day cycle low here, that we should expect some sort of a correction. But obviously this has been much deeper. And this was our first target. So it's bounced off from there. And it looks like it's going to either come back and retest this before we move into the new cycle, or if this is going to be a deeper correction, we're going to come back down to these levels here at around about 49. But the strongest level of support is going to be down here at 48. I really don't see this falling below this level here. That would be concerning if we went like this. So we've really got 2 points of support here at the 50 and here at the 49. And as we know, SPX is quite well correlated with the Bitcoin price. So this may well be giving us a clue that Bitcoin is going to be weak in the coming days and possibly few weeks. And if we move on to gold, we can see quite clearly that we're leaving a little bit of a wick now on the monthly chart, and this is about to close tomorrow. So a little bit of weakness appearing on the monthly chart, But the overall picture, as we can see here, is that we're making higher highs and the gold bull market is still intact. And if we move down to the weekly chart, we'll see a little bit more information about what's going on here. And there you have it. As I mentioned in the last couple of weeks, the Gravestone Doji candle here, this one with the long wick at the top, always seems to give a very strong clue where there is a loss of momentum to the upside and there is pressure to the downside. And so what we've got is an inside bar candle, the following candle here. That's telling you that this big momentum to the upside is now confirmed to be now coming to an end. And then it's followed by an outside bar bearish engulfing candle, this one here. But it is also leaving another clue here that with a long wick at the bottom, this doing this, it may well be that we're going to find consolidation around these levels from the bottom of this wick to around about the top of this wick here. So we're looking really at a consolidation over the next few weeks at around about from 2400 down to 2200. And it's a little bit similar to what's happened here. After a consolidation, that's when the big move comes. So after a period of consolidation, I would expect gold to be moving to much higher levels. And moving on to silver, as mentioned last week, we have found resistance at the 30 level exactly at that point, and we seem to be retreating from that point on the monthly chart here. And if we go to the weekly chart, we'll have a little bit more information here. Once again, just like gold, we've got a Gravestone Doji candle, which is always a signal for bearish sideways action or downward action. And we got that with the inside bar candle, just like gold here. And we've now got an outside bearish engulfing red candle. So once again, very similar situation here. Having topped out at the 30 seems like a period of consolidation going on. And we may well find support at these levels around about the 26. So we can see with the SPX and the gold, as well as the silver, this may well affect the Bitcoin price going forward in the next few days and weeks. And of course, we'll have to have a look at the dollar to see exactly what's happened here. Now, there seems to be a little bit of good news for the wider markets, because as we can see here, the way the candles are developing, we've seen incredibly strong moves to these levels here. I was expecting for it to be rejected at this point around 104. But with the Fed deciding to keep the interest rates higher for longer, we caused this to go up to much higher levels here. However, these three candles are giving us some hope from the point of view that we've got an indecision candle, this green one here, and that's followed by another indecision candle, which we call the hangman candle. And this is usually at the top of a trend. It tends to be a reversal candle. And so far, it seems to be playing out that way with a red candle following it. But it may well be finding support at the tops of these wicks and this support line here. And if the dollar can break down through this green line here, this green line of support, then we can see much further weakness to the downside. And that may well come next week, which then tallies with Bitcoin finding support on the Pi cycle at around about 59,000. So we can see what kind of a narrative is playing out. Short term, Bitcoin is a little bit bearish. This week, you could expect the Bitcoin price to go sideways and consolidate around the current levels of 60,000. But if it does decide to go down to the Pi cycle, that will be around 57,000. Okay, if we have a look at the 60-day cycle for Bitcoin, this seems to be playing out exactly like the wider markets currently. So this is where we are from day 57 low down here for the previous cycle. We are currently today on the 40th day. So we moved past the midpoint of this cycle, which should end around the 19th of May. The current way this is going is that we could well have a failed cycle by breaking below this green line here, which was at 60,760. So if we close down here, below this level, we have a failed cycle. But if we expect the Pi cycle to prop it up next week at 59,000, then this should be quite well intact. And for it to be a right translated cycle, we need to make a move above this point here at 72,700. So we really need to get into that. It doesn't look likely at this moment. And I would say with a high probability, we're not going to move in this cycle before the May the 19th to get above this level here. So just based on eliciting whatever information we have, it looks to me as though we're going to be running down into this red line, i.e. the end of the 60-day cycle. And we can see if we put the Pi cycle on, the green line is going to meet it somewhere down there. So it looks like that this cycle will be intact and not have a failed cycle somewhere here. So I need to keep an eye on those things. And if we have a look at the higher time frames on the overall picture view, it's looking incredibly bullish, because if you come back down here, we can see quite clearly that every time we've gone up, we've consolidated in the top third of the actual price rise, and that's allowed us to go much higher one more time. And exactly the same here. Although we had a period of good consolidation, this was really very bullish because a good period of consolidation allows the whole of the oscillators and the indicators to reset for us to move further up, which is exactly what we've done. And once again, on this big move here, we consolidated at the top third one more time. So there is a pattern developing that after consolidating here and then moving to the upside, we've now come back up and consolidated at once again the top third of the rise. And a few more weeks of consolidation will be a little bit like this and a little bit like this. And that allows us to move to the upside in a nice, healthy way from a structural point of view for the charts. And people always want to know how far this will go. And we can measure that quite easily, because if you take the measure from the bottom here to the top and then take that measure on a one-to-one basis from the correction here to the top, you can see it went all the way up to exactly the same amount. So if we do that here now from the 59,000, we can see from the bottom here, this takes us to a target of around about the 118, maybe 120,000. So that's the next level that we can really expect Bitcoin to be going towards. And now it's time for this. Yes, you've guessed it. We've got to have a look at the Bexit indicator to see exactly where we are and where we're heading as part of the signals and indicators to get us to the top of the bull market. And to do this, I'm going to look at a very unorthodox method, which is actually very effective in terms of protecting you from a big downside. So in order to do that, I'm going to go back to the first cycle and use what we call a method of using this arc here. If you want to use this arc, the way to do it is go to this icon here, and when you click on this, you'll be able to make this into an arc like that. So you'll have 3 points, and you can use this very flexibly like this. And this is how I've been able to use this arc on the support lines of this price action. So in order to make an accurate picture, you need about 3 main points here. And as we can see, those 3 points gave us this arc here. And as soon as the price goes out of this arc, that is the end of the bull market. And you really need to get out at this point. And while you're not going to get the exact top through this method, what it will do is prevent you from riding it all the way down to the bottom. This is very important because the vast majority of people, they tend to go to the top of the market expecting the highs, which we all did at the end of the last bull market in 2021. But instead, the market has a way of surprising, and this is a way to prevent that surprise. So as soon as it breaks the yellow line, that is the time to get out. And if we go to the second cycle, which ended in 2017, what we've got multiple touch points here. All along here, this was an incredibly strong indicator that if you break through the yellow line at this point, you would be avoiding the big drop down to the 3,100 that we got down here. So once again, this arc proved a very useful tool to prevent a slide down to the bottom. Once again, you didn't get the exact top, but it prevented you from incurring a big loss down here. And in the last cycle, we can see quite clearly that this arc worked out quite well one more time. So we had our touch points here, ignore the COVID situation here, got another support here, and support here and there as well. So you got a lot of multiple touch points. And as soon as it broke through here, that was your signal to get out and avoid the big drop to the 15,400. So the question now is, how can we use the arc in the current cycle? And currently, we've seen that we bottomed out here at 15,400. We found support along that arc one more time here and a third time. And it looks like there's a little bit of room for it to go down to around about the 60,000 mark, maybe 59. So again, this arc is telling us that more than likely, with a higher probability, we're going to find some support on this arc before we start running up it towards the end of the bull market. So far, this arc is well intact. And once we cross over the yellow line, that will be our signal to get out that the top has already been met. And of course, we're going to use our other indicators to tell us to get more nearer the top as we possibly can. So there you have it. That's our Bexit indicator for today. I hope you found value in that. Okay, so I'm going to move on before we wrap up to give some insight into the strategy that we're following here at Wisdom Bites. If you've been following my videos for the last couple of years, you'll know that our current portfolio, which is on the Bitcoin Miners Club, 75% of that was actually at this point here when the Bitcoin price was at 17,000. We invested 75% of our portfolio at this point, and the rest of the 25% at the point when the Bitcoin price hit the 15,000. And people have been asking me the reason behind those two different decisions. And so far, as you know, and I mentioned this many times, is that we've been trying to capture the whole of this move here. This is what we want to do with a long-term passive portfolio, that once you get in at the bottom of a bear market, what you really want to do is not meddle with the portfolio and just capture whatever you can for the rest of the bull market until we get to the top here, wherever that's going to be. We want to capture that whole move. So let me give you some background, and you may want to make some notes, because these are the fundamental rules that you really have to follow as an investor and a trader. And there are two main rules of investing for traders and investors. The first one being that you must start with the premise that the market is always right. Let me repeat that one more time. In case you think that the market is wrong, I'm going to repeat that one more time. The market is always right. It is never wrong. And the second premise is that as a trader and an investor, we must accept that we can be right and we can be wrong. And always remember the golden rule: the market does not care how much money you win or you lose. To the market, you are just another number. The market has no emotion. Therefore, to have a chance of winning in this market, in this space, you have to put your emotions aside. Because one thing we know is that emotions is a money killer. And once you've got those rules as your foundation to be a trader and an investor, then you just follow three simple rules. Very, very simply. I don't want to go into too much detail because it can complicate things. But if you follow these three simple rules, once you've got that foundation behind you, then all you have to do is, firstly, identify the opportunity. And this is what we did here. Once you've identified the opportunity at the bottom of a bear market, based on the previous cycles and the way the market has previously moved, once you've identified the opportunity, then the second rule is to commit to taking advantage of that opportunity. And that is to go in early and go in hard. Because if you dilly-dally, you're going to end up buying at the higher points over here. And that is not conducive to good investing or trading. So the first point is to identify the opportunity. The second is to go in early and go in hard. And the final point, the most important part of the whole process, is to have an exit plan to take your profits. And this is what we've got with our Bexit indicators. And as you know, I don't carry Bitcoins. I don't have any altcoins. My full investment of the portfolio is in the Bitcoin miners. And the narrative and the premise for investing in the Bitcoin miners is that they are a leverage play on the Bitcoin price. So what we've got from the previous cycle, as I've mentioned many times before, just as a reminder, once we get past the halving, like we did here, this is where the Bitcoin miners should now take off to the top of the bull market. And this is currently where we're at. And we're in these channels here. This is represented by Marathon, but most of the other Bitcoin miners are in this channel. And we should come to the end of this channel around about the end of this year, as per our narrative that this is a left translated cycle. And that should be at the end of this year at anywhere around these points, about $150, $160. And the current price there is $18. So that would be around about an 8 or 9x from where we are currently. And because we're not expecting Bitcoin to have an 8 or 9x, because an 8x would give Bitcoin a price of 496,000. So not many people are expecting Bitcoin to go to 500,000. And hence this is the leverage play the Bitcoin miners have. And this is the reason why I'm in the Bitcoin miners. So based on those three principles, we've basically identified the opportunity here, and my average price for getting into Marathon is just above $4, and currently it's $18. We've gone in early and we've gone in hard at these 2 points, and we have our exit strategy to try and get out as near the top with the Bitcoin miners by the end of this bull market. So we have an exit strategy as well. So we've got the 3 points all covered. And I know many of you have been trying to join the Miners Club, but due to the demand I've been getting, I've opened up the memberships one more time until further notice. So all you have to do if you want to join the private member section is to click either the join button here or the one in the description box with the red box. And when you do that, and as you can see, the price is £12.99 per month. And it's come to my notice that if you go through Apple, they put on another £4.99. So they will charge you £16.99 if you go through Apple. But that has nothing to do with me. If you join through the normal channels, then it should only be £12.99. And what we do is we do 2 videos per week on a Wednesday and a Friday, as well as do these market updates, as you can see here, every single day at the close of the trading session. And the last video was this one here, which is an incredible trading method which nobody seems to be using, called candle by candle trading method. And that is for those who wish to trade on a regular basis. And what I want to mention here is a little observation, is that there is a strong correlation between what the price of the Bitcoin miners is and the numbers of people joining our private member section. When the price has arisen, the numbers of the members increases at this point, and when the price of the miners go down, there are more people cancelling at this point, and then more people joining here and more people cancelling here, more joining there, and now recently we've had more cancellations down here. And so this is exactly the opposite of what it should be. Because now we are at a lower point down here, this is the point to get in for the rise that's to come over the next few months. So quite an interesting observation. Okay, so we'll leave it there. I hope you found some value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so, and turn on the notification bell. If you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.